Hello, and Happy New Year from your friends here at the Financial Advisory Group. For a lot of reasons, I think we're all happy that 2023 is here. One of them obviously being the market. We did send out a video at the end of the year last year, just wishing everybody a happy New Year, and hoping that we all do our best to make 2023 the best year that we can. So let's keep that in mind. Also, it'd be hard not to have this video without saying, this is the first one we've made without Diana in the office. It's definitely different not having her here. We miss her, and we wish her nothing but the best, but we know she's handling this retirement thing pretty darn well. So best of luck again, Diana. Well, if you notice in that video at the end of December, we conveniently left out talking about the markets. I wonder why. We wanted people to focus on the holidays, enjoy the time, and no need to worry about this stuff. As we look forward, though, this is the time everyone says, hey, what's your view on 2023? And I think it's important to note that as most of you who've worked with us for a long time, trying to predict markets over short time frames it's a loser game. It's not worth it. As one of our favorite investors, Warren Buffett, has always said, it's important to know what you don't know. And what we don't know is where the market's going to be in a week, a month, a year. We just don't know. What we can do is look back and use history as our guide to say what happens after years like last year. Let's get to last year. I don't think it would be an understatement to call last year a painful year. We found ourselves talking to some clients this year, and I used some pretty blunt terms of the market punched us in the face last year, and it does not feel good. And unfortunately, with the market, that happens from time to time. That's part of the investing process. What we as advisors try to focus on is, okay, we know that's going to happen. We can't avoid it. The best decisions, though, tend to be made in that time period. Are there any opportunities we can take advantage of? Well, before I keep gabbing on, let's get to some charts. If we look at the charts we're going to look at today, what you can notice is that there's a theme to them, right? The theme is that last year was a very painful year. And at this point, we need to figure out what happens after this painful period for the typical investor. This chart just simply shows the pain that we felt. There were 65 days in 2022 where the market fell more than 1%. That's the highest number we've had in about 15 years, and the third highest number in the last 30 years, let's call it. It was painful. And I think the hard part to 2022 was there was nowhere to hide. Diversification didn't work. Bonds had their worst year almost ever. Stocks had a pretty bad year. It wasn't the worst they've ever had, but a pretty bad year. There was not many places to hide. And that made the year even more painful than normal. Because of that pain, how was our confidence? Our confidence got shot. We talked about this chart last year that consumer confidence has actually dropped dramatically. The interesting part is we're still spending money. We're still spending, but our confidence is very low. The good news on that side is as a confidence indicator is actually a very opposite indicator for the market. As we spoke about last year, if you take the 8 times that the consumer confidence hit the lowest and go forward 12 months, on average, the market's actually up 25% when we feel the lowest. However, if you take the 8 times we feel the most confident, on average, the market's only up 4%. So one of the good indicators is that when the pain comes, there's healing after. And if you remember back to 2022, as we came in, we sent out a video, our year in 22 view was turbulence, was the word we kept using. It was a turbulent year that we saw coming. Boy, was it more turbulent than we thought. Our word for 2023 will be healing. After a painful time period, whether it's an injury you've had, healing starts. And it doesn't mean the healing process is this smooth, perfect journey that you go to rehab and everything goes perfectly. The reason we're using that term healing is after these painful periods, things do get better. So we'll keep that theme going throughout the talk today. If we look forward, the pain is what we remember. We don't remember, as the saying goes, no pain, no gain. We don't remember the gain that comes after as much as we remember the pain. This chart here looks at all the bear and bull markets that have gone back over the last 70 years. And what you see is the red bars are the bear markets. They come and go, right? We've seen the average loss is about 33%. Last year, we got to close to 30, and the average length is about 13 months. However, the flip side is the bull market that comes after each bear, and it's happened every single time, returns 265% and tends to last 5 years. But our minds remember the pain more than the recovery, right? We remember those painful periods. That's the hardest part to invest in. So what we want to do in 2023 is focus on this blue section. Yes, we just went through another red painful section, and it may not all be over. But what we want to be is prepared for the blue section that's coming next, for the recovery that is coming, the healing process. We had this slide as one of our favorites from last year as well, that if you look historically, when markets get beaten up, they recover. This goes back to the S&P, and every time the market has fallen 25% or more, you can see it's happened multiple times, not just once or twice. And you take, how did the market do going forward? What you see is every single one of these examples in history, going back to the 60s, is if you look forward 1 year, 3 years, 5 years, 10 years, on average, the future potential returns are great. We just have to get there. So the pain has now come. Again, now let's focus on this healing and recovery process, which we think, if you look close enough, and this date down here shows it, since September 30th, if you look under the hood, you've started to see some of this recovery happen in front of our eyes. What do we mean by that? You've actually seen the market do pretty darn well since September 30th. More importantly to us, because markets come and go, right? They go up and down. Diversification is working again. You're starting to see things like bonds do well when the market gets hit. That's what we need. As advisors and as investors, it's important to have diversification working, and it looks like that process is happening. Again, part of the healing process is happening. The strange part, too, to the last 2 years is if you think back to how you felt as clients at the end of 2021, excited, values were high, you were excited looking forward. On the flip side, advisors, we were worried. We said that things would be turbulent because when things go up, eventually they come down. Now let's go to the end of 2022. We switched roles. The client on the other side of the table is now worried and nervous where we were last year. Us as advisors, we actually think there's more opportunities now than there have been in a while. So now there's the opportunity to plant those seeds we spoke about when COVID happened and let them grow over the next 1 to 3 years. Doesn't mean the next 1 to 3 months, but the next 1 to 3 years, we now feel more, using that term, optimistic, that there's some opportunities out there for us to take advantage of. So continuing down this theme and talking about those opportunities, this chart here just simply shows that at the end of 2021, the valuation of almost every single investment you can own was well above its historical average. That's these, if you call them green diamonds here. Where are we now? Great question. That's the blue circles down below. So what you've seen is value has been returned. There are now some opportunities that present themselves. So our view is, yes, we know it was painful, but let's focus on making the smart decisions now and taking advantage of some of these opportunities. Again, we sort of flipped roles. The end of 21, you're excited, we're nervous. Now you're nervous and we're more excited. And in our view, that's a good thing. That means there's good times ahead. What did I say when we talked about healing and the healing process has begun? The word of the year for 2022, I'm sure for some, was that word inflation, which we probably sick of hearing about by the end of the year. You're starting to see signs that it's rolling over and getting better. We've talked about this on one of the videos last year. We used that term less worse. If you look at a lot of places, things are getting less worse. Yes, of course, there are things like eggs that are still not coming down in price. But what about lumber? What about building materials? What about even consumer goods, right? If you need a fridge, guess what? You can get one now. Cars are getting easier to purchase. Not easy yet, but easier, right? Less worse. Used car prices have now come down 5 months in a row. We're starting to get back to that normalcy, right? You're starting to be able to travel more. To us, that less worse theme is continuing, and that's allowing the healing process to continue. So if we look close enough, the healing is happening in front of us, which is very important for the market. The market won't wait to recover until we feel great. The market will recover throughout the healing process, and that's important. We can't wait till we feel great, then it's too late. We need to take advantage of the recovery as we feel better and we heal. Now, let's talk about the economy. We have people, that word, the favorite word, and believe me, we'll talk about a lot this year, is that word recession. Recession, is it here? Is it not here? Is there one coming? Well, let's look at right now. Right now, you actually have a very good economy. Here's the unemployment rate. It's about as low as you could ask it to be. As many of you know, if you want a job, you can find it. If you want two, you can find it. The other plus to that is most people working today are making more than they ever have before. The percentage of people making above minimum wage in low-paying jobs, it's higher than it's ever been before. And we all see examples of places hiring at $15, $20 an hour with benefits. So there are some positives out there right now on the work front. Then let's look at consumer spending. Here's consumer spending, higher than it's ever been. So just those two indicators, I know it's simple, we're not in a recession right now. If you want to call one, that's okay. If there is, it's a confidence recession, but this isn't a true recession at this point. Now, is one coming? That's the million-dollar question. We'd argue it's best just to assume there will be one. I think it's too early to tell. What's interesting is the Federal Reserve will probably have a lot to do with this, depending on how aggressive they are. But our view is, let's just assume. Why not assume one's going to come? They're going to talk about it all year anyway. Why not just assume one's going to come? As I'm sure most of you have heard, we agree it will probably be a less intense recession than we're used to. And that word recession, don't be afraid of it. They happen. Another chart here looking back during those 70 years, recessions are these little red bars. It's when GDP, the economy itself, shrinks. Right? We've had them. We've made it through all of them. And the thing again, we focus on the recessionary period, not the fact that the expansion period lasts 7 times longer than the actual recession itself. So you could say, Damien, you said we're healing. You said things seem to be getting better. Then you also said a recession's coming. How does that make sense? Well, keep in mind, the market tends to look forward. Why would the market go down in 2022 when I just said the economy is doing great? Because the market is looking forward. And what the market's telling us is that this economy is going to start struggling in 2023. So how does that mean the market could still do okay and heal in 2023? Because the market in 23 is more looking at 2024, right? When the recovery will happen. The market's a weird thing. It's always looking forward. Hence what this side is. I think it's a great slide to look at is when recessions happen, this chart's a little bit busy, but if you follow me here, this light green, we'll call it a teal line, shows you the actual economy itself. And the economy rolls over and doesn't bottom here till about this period. The blue line, however, is the stock market. If you notice, the stock market actually starts going down before the economy does poorly. We just said that's what happened in 2022. But also, more importantly, the stock market starts recovering before the economy recovers. Markets tend to go up during recessions, not down. They go down before. So our view is a lot of that has happened. It doesn't mean it's all over, but a lot of that has happened. And to go back to this healing comment, we think that the healing has begun, but the reason we like this healing suggestion or comment is that all of us have had an injury, a surgery, something to recover from. We wish we had surgery and the next day we were good. We all have friends going through issues, health problems. We want them to recover as quickly as possible, but we know the recovery process is a long roller coaster winding road. There's good days and bad days. Our view on 2023 is at the end of the year, we're going to have healed a good amount. That we'll be happy with where we are, but there may be times during this year, just like during therapy, like, man, what am I doing? Why did I do this? It's not worth it. It will be worth it, right? The healing process, although it can be slow and we need to be patient, it's worth it over time. So a year of pain followed by a year of healing and recovery is the way we view this right now. It will be bumpy, as we talked about. We still think, to go back to that comment from last year of turbulence is probably not going away. But to end on a note of always trying to think of a theme of something we can look at. And this is something I was talking to a friend recently about who's going through some recovery from some surgery as well. And actually a client gave me a tip up to use this image. I think Rocky said it best, right? It's safe to say last year we got hit. We got punched in the face. But as Rocky, a great philosopher, once said, it ain't about how hard you hit. It's about how hard you can get hit and keep moving forward. Well, we want to keep moving forward. That's where the opportunities lie. So thank you again for another great year of trusting us and putting your confidence in us, especially in a year like 2022. It means the world. We look forward to 2023. We know it will be difficult. None of these years are easy anymore, but we thank you that you trust us to be by your side with you. And we look forward to go through the healing process of these markets with you. We'll always look for opportunities, do our best to stay on top of things. And also we'll keep you posted as our new employee comes on board in a couple weeks, and I'm sure we'll be introducing him as well. Again, we miss you, Diana. We wish everybody a happy new year, and let's all commit to making 2023 the best year that we can. Thank you, and happy New Year's.